Welcome to Bears in Exile. Today is Saturday, April the 20th, and this is a quick hit on the indexes. Starting off with the Dow. Alright, so we've had a nice decline. We've gone right into the long-term moving average bar. This is the place where it should bounce. It did a pretty good job of penetrating into the bar, getting a piercing tail through the major price consensus level, but it was able to close outside, which is pretty good. Beyond that, do we have a good indication that we're at a turning spot? And the answer is not quite. We have nothing really turning around yet. Everything is still pointing down, but I would not be surprised whatsoever for this to move on up from this point, simply because of the candle, new recent low at the bottom of the possible range, hammer, and of course the long-term moving average bar itself. Does this mean that it's a straight shot bounce up? No, it has some things to turn, but I certainly would be on the lookout for at least a short-term bounce. And of course beyond that, we have this new all-time high up here. There should be an attempt to meet or exceed it, preferably ending with a lower high, making a failed double top. But that could be a few days away. Heck, that could be 2 weeks away. But anyways, moving right along to the Dow Jones Transport. So we've been looking at this one loosely, because we were figuring that if there was going to be a bounce, this would be the place that it would start. And does this one look like it is due for a bounce? Yes, it does. Absolutely. Positive divergence in the MACD. I keep doing that. There is no positive divergence in the MACD histogram. It is simply going up. Wishful thinking just will not stop. Anyways. CCI, stochastics, RSI all going up, MACD histogram going up, 14-day RSI moving average massively low. Massively low. And actually if I scale out a whole bunch, it actually does have a little further to go if we were to look at more than a year out. But it's pretty darn low. For what it's doing, it's pretty darn low. Still inside the long-term moving average bar. It is getting sucked back into it. Talked about that on the last video. Nice bump up on Friday. The question becomes, can it get ejected from the long-term moving average bar? Can it beat the lower and major price consensus levels? And can it beat a previous high? That is an awful lot. But one strong day like Friday, and you're most of the way there. So a tall order, yes. Insurmountable, absolutely not. Going on to the SPX. Maybe we can get a little more information, squeeze it, wring it out of here. We can see that it attempted to get back outside the long-term moving average bar. It got right to the major price consensus level. This is all good. This is all very good for the bulls. There's a long ways to go before we have a very nice, strong indication that we are going back to challenge the previous high. We do have rollover in almost all of the indicators. Let's zoom out a little bit. This would be a secondary reset from the way that it looks at the moment. How high can it go? Well, you would think that if it can take out the high from 3 days ago, that'd be a fantastic indication. Of course, if it does that, you've already missed probably a whole bunch of the move. So very precarious state at the moment, but I would not be surprised whatsoever for it to attempt a break on this one right here. I think that'll be the very important level where it either craps out and fails, or we have a really strong initiation that is fueled by a squeeze. Nothing in the heat map to suggest anything. Very difficult moment. But I do think there will be a attempt once again at the all-time high. Going on to the VIX. Now here is a great tell. Talked about it being so darn strong the last couple days. Surprising. The important thing was that it would hopefully maintain the 200-day moving average. Instead it fell through it, closed below it today. And we were saying on the last video that this was just too darn high, that it needed to come back. It just went farther than the bears would hope. So this could be a tell that the market will be going up, and we now have another lower high, obviously. Can it go back down to challenge the lows? Yes, it can. We have everything rolling over. We do have a blip on the heat map for bottoming area, but I mean, that was a big down. This looks very poor. Very poor. And you could look at this and say, oh, well, this is just a gap fill. This area right here. It's possible. But I do believe we have a little bit of a gap left below us. Let me see. Yes, we do. We have a little sliver of a gap still right here. And we still have this gap right here, of course. Going on to IWM, small caps. If we're going to have a decent rally, this should look very nice. And in this case, we still have positive divergence, MACD histogram. MACD histogram going up, the MACD is not. Up on the CCI, the RSI, and the stochastics, not on the 14-day RSI moving average, but let's see how low it is. It's pretty low. Still could squeeze some more out, but pretty low. Now today is interesting in that we have an uptick. Uptick would take this up to just shy of 92. This isn't the prettiest of short-term moving averages, but it would make sense with the long-term moving average bar to suck it back in, even though it is taking really bad damage. So I really don't think that that is not a bad target, just below 92. Matter of fact, it's probably a decent target. Really depends on the sentiment for this coming week, and Monday will be very interesting. Going on to SPY for our volume information. And once you look at this, the bears, in my opinion, are now in trouble. Of course, we had the nice day on Friday. Look at that on balance volume. Woo! It's going up. Remember I was saying that we needed to see if it could hold below the target line or if it would come back up. It started to come back up on Friday. It is still a red. Maybe it could get turned down on the trigger line, but for the moment it's just too iffy for me. I have a lot of skepticism for the true break here. The only bad thing about that is when it does fully break, I'm going to miss at least a little bit of it. The other problem is volume weighted MACD is coming back up, turning a danger area into becoming a green. If we had both of those turn, we would have 3 greens all of a sudden, and the squeeze would be on. So, very precarious, but I think it's been good having some skepticism about the on-balance volume. And that's it. I'll try and put together some algorithm targets for everything this weekend, and we'll see where we start to go. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you very much.